The dream solution for many financial goals. In this episode, we are going to address the question, can IUL be used for financial goals other than for retirement? This is episode 18 out of 21. I would advise you to watch the entire course. It's a free course that can empower you in about 4 to 5 hours of education to be able to accumulate an extra $1 million that can generate $100,000 a year of tax-free income that lasts as long as you do. In this episode, we are going to discuss and highlight why a max-funded indexed universal life insurance contract, something that I affectionately call the laser fund in my most recent book, is actually the dream solution, the miracle solution for many financial goals. In fact, oftentimes when I speak to live audiences, I will pose this question. What would you call something that you put money into and it accumulates tax-free, and it accumulates at great rates of return, averaging 7 to 10%, some years higher, some years lower, but averaging 7 to 10% tax-free. You can access the money without penalties from the IRS. During banner years, you can put in large lump sums. You can pull money back out a month later. And when you retire, every $1 million can predictably generate $80,000 to $100,000 a year of tax-free income for as long as you live. And when you finally die, it increases in value, maybe doubling or tripling instantly and transferring income tax-free to your heirs. What would you call that? Now, when I ask that long question, invariably people, especially on the front row, go, a miracle, a godsend in this topsy-turvy world of financial markets that are going up and down, and the market being like a person with a yo-yo. And I go, yep, but you can't call it an investment because investments in the Internal Revenue Code are subject to tax sooner or later. It's usually money in investments are subject to market volatility. I don't want that. I don't want market volatility. I do not want to pay taxes sooner or later. So this is why my favorite vehicle, the laser fund, is protected under the Internal Revenue Code under Section 72E, 7702 and 101A, as I've explained in other episodes. So many times people say, well, this is a no-brainer that it can be used for retirement, that every $1 million can generate 70, 80, 90, 100,000 a year of tax-free income for as long as you live. Yep, you compare that to any other alternative like IRAs or 401ks in the market, and frankly, if your money's in the market, they cannot show you a predictable income stream. The most they will usually show you is a 4% payout, and you have to pay tax on that. Here, I can pull out 8% and it's tax-free, not 4% and only net 2% after taxes and fees. So it's a no-brainer for retirement. But what about other financial goals? The indexed universal life policy, when it's structured for living benefits, can be used for real estate management, college funding, business working capital, emergency funds, on and on and on. Let me give you a few examples, because in my book on this side, this is actually 2 books in one. This is the left brain side with charts and graphs. This side contains about 100 pages with 12 chapters of 62 actual client stories and examples of how the laser fund can be used for all kinds of other goals. It's the dream solution. So let me share with you some of those. So I've realized from doing this for more than 45 years that some people learn left brain with charts and graphs, but other people learn by stories and examples. That's why this side of the book has 62 actual client stories of how the laser fund is used for all kinds of goals as the dream solution. So for example, sometimes people structure it for death benefit, and it actually outperforms whole life insurance to put in less premium to maximize what you leave behind tax-free. Yeah, you can use it for that. But a lot of people, of course, use it for retirement planning like I've talked about, and that's what most of the examples are in this free mini course. But the next chapter is working capital. So if you're a business owner, I've had many clients who own a business, and this is where they have their working capital. So that if they need money to tie up a piece of real estate or to buy some machinery or equipment, they will have their working capital inside their laser fund because it's tax-free. You can access the money. I've had clients who say, Doug, I need $1 million. How soon do you need it? Oh, in the next few days. I send them the form through an email. They fill it out. They borrow most of the time. They don't withdraw because they borrow at 5% and they continue to earn 10, 15, even 20 and 25%. So they use it for working capital. They take the money out. They don't have to pay it back, but most do because they're putting the money back from the money they made in their business. But many business owners will borrow $1 million at 5% interest on the index loan, and they continue to earn 15, 16, even 25% while they're using their money. It's a working capital account. This is incredible. This is also true for real estate management. So when you use it for real estate, which is what I have done, I keep all my real estate equity in my laser fund portfolio. See, I have my equity there because I continue to earn tax-free rates of return because equity trapped in the property is not liquid when I really need it. I've learned that lesson. It's not safe. The real estate can drop in value. I don't lose with the money in my laser fund due to market volatility. I also earn predictable rates of return over here tax-free. The real estate is going to go up or down in value regardless of whether it's full of equity or has zero equity, whether it's mortgaged to the hilt or free and clear. But by keeping my equity separated over here, it's liquid, safe, it earns a predictable rate of return, and it's tax-free. Whatever the real estate does is going to do regardless of whether I have the equity trapped in the property, which I think is dangerous in many situations, versus if I have it over here. So I participate in the real estate investments and the real estate market without my money actually tied up or at risk in the real estate. Does that make sense? This is also true when I'm using the money for any other purpose. We've had many people who will save for their children or grandchildren's college educations in the laser fund. There's examples in here of that, and it knocks the socks off of a 529 plan. A 529 plan just allows you to accumulate the money tax deferred and you pull it out for your college funding for your kids and grandkids. The laser fund does that. It's always done that. But hello, if I put it on me and I happen to die, or if I own one on my adult children and it's for their children, my grandchildren's college education, and they die or I die, the college funding is funded instantly with the tax-free life insurance proceeds. But if I live, I'm able to access the money tax-free and use it for their college funding or to help them start a business. I'm not restricted just to college funding for that purpose. So it has all the benefits of a 529 plan and a whole lot more. As you continue, people use it for business planning, for estate planning, for strategic rollouts. This is probably one of my favorite uses for the laser fund. So here's how you do it. Now, many times in my 45 plus year career, people have come to me with lump sums. Maybe they got a settlement from an accident or a lawsuit or something. Maybe they inherited money. Maybe they sold a piece of property and they're going, what should I do with this $200,000? What should I do with this $500,000? What should I do with $1 million? I go, well, I would suggest you keep it tax-free and that you earn predictable rates of return averaging 7 to 10%. They'd go, wow, sounds like a dream solution. What's that? And I would explain a laser fund. So I could accommodate lump sums of money that came in from an inheritance or the sale of a property or what have you. Maybe they sell their business. But many times people, as they approached retirement, they sort of had their head in the sand for years, putting money in the company's 401k or into IRAs, or maybe a 457 plan or a 403B for school teachers or what have you, thinking they were going to be in a lower tax bracket when they retired. And as they approached retirement, they realized, wait a minute, I'm not in a lower bracket. I go, yeah, I could have told you that 25 years ago. Most people are not in lower tax brackets when they retire. They go, well, I always thought I'd be in a lower bracket, but now I'm going to have to pay tax on all this. I go, what? I'm going to have to cure that tax disease. So we would perform a strategic rollout. That's where over a 5-year period, maybe longer, you strategically roll the money out. Not roll it over, you roll the money out. A rollover is going from the frying pan into the fire, so to speak. You're taking money out of a 401k and rolling it over to an IRA and continuing to delay, defer, procrastinate paying tax. No, you want to get the taxes over and done with in today's lower tax rates rather than thinking by postponing and continuing to defer to some future perceived unknown advantage and withdraw your money down the road when most people are convinced taxes in the future will be higher. Hello, look at government spending. So once they see that, the wisdom tells them, okay, let me get the money out and the tax is over and done with. And then we take the net after tax rollout monies and we put it where? Into something that's going to be tax-free from now on, a laser fund. And as they do that, they're able to ride the markets up when the market's doing well, but when the markets crash, they don't lose, they're protected. But they're able to accumulate their money tax-free, and at the end of the day, when they die, it blossoms and reimburses the heirs with the money that you paid in tax by many-fold. And so they're not out anything by doing a strategic rollout. There are stories in the Laser Fund book, in that chapter alone, where you will read how couples have saved, 2 school teachers, husband and wife, we saved them $250,000 of unnecessary tax, rolling the money out of their IRAs, 401ks, and 403bs. They were so grateful because of that extra $250,000 that they would have shelled out in unnecessary tax. Another gentleman, his wife passed away at age 70 and a half. He came in and he had to take RMDs. We said, no, don't take the required minimum distribution. Let's get the money all out in 5 years. We saved him $750,000 of unnecessary tax, and now he has a sizable laser fund generating tax-free income of $75,000 a year. Another couple, a husband and wife, both physicians, they were going to pay $2.6 million in tax because they had over $5 million in their IRAs or 401ks. You know what their CPA said? They can afford to pay $2.6 million in tax. I said, well, let's ask them. Would you like to pay an extra $2.6 million if you don't have to? Now, I couldn't save them all $2.6 million, but I saved them $1.2 million doing a strategic rollout. What did they do with that $1.2 million of otherwise payable tax? They put it into what we call a family bank, funded in their laser fund that is generating $120,000 a year of tax-free cash flow for their kids, their grandkids, humanitarian, military, religious missions, all kinds of goals, college funding that they couldn't have done if they would have left it in their IRAs and 401ks. These examples, we have 62 actual client stories in this part of the book. So I would recommend that you get your free copy. I'll pay for the book. You go to laserfund.com, and pay $5.95 shipping and handling, and I'll send out the book to you absolutely free.